Hey everybody, let's get ready to trade May week 1, 2019. Taking a look at the S&P 500. This week coming up, we've got a lot of stuff coming our way. Google earnings on Monday, Apple earnings on Tuesday, the Fed on Wednesday. I can't believe I let that one slip past me on the radar, but we do. We have the Fed on Wednesday. Can you believe that? No wonder we're probably like running up into these highs, or yet having all this, sort of hand wringing going on our way up into an all-time high. Maybe people are like, worried that that Powell's going to pull a fast one on us and switch gears again, and maybe that's why we've been sort of holding back. But I'm surprised CNBC hasn't been banging the gong about the Fed on next week. But I'm sure that'll start up on Monday. But in any case, we have the Fed on Wednesday, and then we have the jobs number on Friday. Non-farm payrolls report, jobs number. Okay, that's a lot of potential volatility coming our way this week. We could be looking at an incredible move where we just keep on chugging higher and higher, or we could just make a little bit of a move up, a little further up, hit a road bump, and then have selling just kind of get out of control and escalate lower. But let's just sort of take a look at and rationalize how we can get to certain spots now, and getting a pullback from there would make a lot of sense, because we could get a very satisfying 90 to 100 point pullback from some of these levels, and we would still be able to hold something very important down below, buy it, and then ride it back up again. Okay, so here we were working against this gap all week. This was the final gap from 2018 that we took out. Here was the second to the last gap, this other blue one down here, and you can see how we churned and tried our best to move above this gap, and we kept coming back down to it. But once we pulled away from it, we really moved away nicely, and now here we are at this last gap. And even though we took a look above it and we fell back down in it, you can see that none of the closes, even on Wednesday and Thursday, when we had those nasty little sells into the close, they still held above this gap. So clue one as to when we pull back will start with falling into this gap and not being able to recover out of it. And I talked a lot about this gap the last couple of days this week. This runs from 29.25 on down to 29.18. Okay, so as long as we hold outside of that gap, I believe we're going to go ahead and make our new all-time high and keep moving on. The close on Friday was 29.39.88 for a 2-cent beat of this failed intraday high that we made in October against the all-time high over here on the right that we made in September at 29.40. So we closed above this double top level, but yet we still didn't make a new all-time high. So I really think that this is a very bullish sign, and that we're probably going to move out and go higher. If we're going to go higher, we're going to be going into uncharted territory, and we have to start doing things like making measured move calculations, or using our 80 handle rule, or looking at how much of a percentage we are above a specific level or a point or a simple moving average in order to sort of guesstimate where they're going to pull the plug and where we're going to reverse. So if we get up to 29.50, we start into the 80 handle rule. If we can get over 29.50, we go to 29.60. If we can get over 29.60 to 65, then we should take a shot all the way up to 29.80. Up at 29.80, at 29.78, as of Friday's close, the 50-day simple moving average, this would take us 5% above the 50-day simple moving average. In going through my chart, I haven't seen us be able to sustain a move much higher than, or any higher at all, than 5% above where the 50-day simple moving average is on a closing basis. And of course, that's going to rise each day. So if this takes us 2 or 3 days to get up here, we could go above 29.78. We could go all the way up to 29.80, maybe even as high as 29.85. Okay? Another thing up here at 29.79, we will have put on a 7% gain on where this whole leg that we're in the first place started from at 27.84. That's where March hit its high. and then rolled back down to about 27.84, and then we launched from that low on up to this leg that has taken us to where we closed on Friday. Okay, and as for a 100 or a 90 to 100 point pullback from these levels, let's talk about 29.50. Okay, 50 points off of 20 or 100 points off of 29.50 would get us back down here, okay, to where the quarter started in the first place. So over on the left side of the chart here, you see this was a gap up open that we had on April 1st and where our quarter started. So if we're just going to roll up to 29.50 and pull back 90 to 100 points from there, we would break down through the 10 and the 20 day, and we would come down here and we would hold open this gap and hold above the low that we've made for the quarter, find buyers and move on up from there. And then at that point, that move up would take us on out of this altogether, and that would be that move that would maybe take us up to 3,000 and above. Okay, if we move on up to 29.60 and pull back, what we would do is we would come down and we would hold above right here. This was the March high and the Q1 high. So that would be an even stronger hold above for the quarter. Okay, and as I said before, if we went all the way up to 29.80 or so and pulled back, that would take us down to right here on a pullback. And this is that first gap that we fought to come through. This was the gap that happened between the 10th and the 9th and the 10th of October. And so we struggled quite a bit to get on through this gap. So a 100 point pullback from all the way up at 29.80 would have us come back down here and hold this gap open. And if there are buyers waiting down here, great. Also, that's a kind of an interesting 80 handle rule thing playing out, because if we go to 29.80 and we roll all the way back down to 28.80, we know 28.80 holding gets us back to 2,900 in terms of how the 80 handle rule works. So some good positive reasons to look forward to that pullback from these levels up here. Nothing to be afraid of, unless of course you have a lot of individual stocks in a portfolio. Then of course that's going to be a little bit scary. But there are ways that you can hedge that by buying puts on the S&P 500 that can help you hedge against the damage that's happening to your portfolio in the meantime. But basically, with the Fed on our side and an election looming, and you know that this president marks his entire success as a president on how high the stock market is. So if there really is a plunge protection team, this is the guy that's puts it to work and has it doing its job. Okay, so here, this is the roadmap, but just from a different vantage point. And I know that this looks like a lot of overkill here, but believe me, when we're in the midst of a big pullback, you're glad to have all these levels and some nerdy girl who keeps track of all this stuff on your side telling you, yeah, this is what this means and this is what that means. So that's why it's all here. But let's take a look at this move right here. This was March. This was the March and the Q1 high, and then the pullback. This was about an 80-point pullback that happened just in 3 days. We came up to 28.60 and pulled back all the way down to 27.84. So it was like a 76-point move made in 3 days. If we added maybe one more day down onto this, that's how that 90 to 100 point move could happen. So it doesn't have to be something that's drawn out over the course of weeks, you know, although it could be. It doesn't necessarily mean that it's going to happen in 4 days like this, but I just wanted you to see that, you know, and remind you, as if you didn't already just live through Q4 of 2018 and what happened to us there, but just to see how quickly it can happen. So anyway, and also what's interesting here is that this is that if we were to go up to 29.60 and pull back, this would be that high that we would hold against. And if we went only to 29.50 and pulled back, this is the level that we would hold here, okay? So anyway, I hope that this video was a little bit shorter and to the point and helped you out and got you ready for next week. If you have any questions, just always send me a direct message or just tweet, you know, tweet in the private account. It's just you and me and the 75 or so followers that are in there right now. As always, good luck and good trading.